experienced trader and you already think you got it figured out, good, swipe away. But if you're new, I'm about to share knowledge on what I wish I knew if I had to start over trading again in 2026. What is Forex and what exactly is being traded? Well, Forex, also known as foreign exchange, is actually the largest market in the world. It is a global market where values of currencies are being traded, and it has a daily turnover of 9.6 trillion US dollars per day.
Wow.
FBI, open up!
And back in 2019, we actually were doing a turnover of like 5.7 trillion per day. That just shows you how the market itself is actually growing, right? Now, with that being said, there are two types of major market participants. It's actually retail traders, which is actually normal people like you and me, right? Now, there's also institutional traders, which actually consists of banks, hedge funds, trading firms, and so forth. Now, retail has more participants, but me and you, are only responsible for a very small amount of the market flow that's actually flowing in the market each day. Now, with that also being said, we have what we call a currency pair, right? Now, a currency pair consists of a base currency and a code currency. The euro will be our base currency and the dollar would be our code currency. Participants trade the value of currencies against one another, right? Which is actually the asset and the contract. Now, here are more examples. Like I said before, we have the euro and the US dollar. We also have AUD against the Swiss franc, and we have the dollar against the Japanese yen, right? Now, these are just examples. There's a lot of currencies out there. A base currency, in this situation being the euro, is equal to 1, right? And the code currency is the equivalent value of 1 unit of the base currency, right? So, I know that sounds complicated, so listen to this, right? So, if the value of Euro USD is 1.17633, that means 1 euro is equivalent to 1.733 US dollars in this situation, right? Now, let's move forward, right? There are actually different currencies and different currency pairs, right? Every global currency is available to trade in the forex markets. They're split into different categories. We have your major pairs, your minor pairs, and your exotic pairs. Major pairs with best trading conditions. Just with that being said, right, let's say we have your minor currency pairs. Minor currency pairs, known as cross pairs, are any other pairs that do not include the US dollar, right? For example, we have your KJPY, which is actually your Canadian dollar versus your Japanese yen. We also have your Euro GBP, which is actually your Euro versus the Great British Pound, NZD, and which is actually against your Swiss franc. I won't list them all, but these are a few examples. We also have exotic currency pairs. Exotic currency pairs are made up of one major pair against one emerging currency pair, which is actually USD against your Mexican peso, your USD against your South African rand, your USD against your Polish zloty. Now, I suggest very strongly you avoid these pairs due to bad trading conditions. Of course, as you upgrade your skills, you may start looking into trading these pairs, but I strongly recommend, even today, I myself don't trade those pairs.
Sometimes it may be good, sometimes it may be shit.
Now, how exactly is money made trading Forex? Well, very simple. In Forex, money is made by correctly betting on the direction of a currency valuation change. Example, if we think the euro will go up against the US dollar, we buy the euro USD. If we ride, we sell, which means we close the contract at a later time or date for a profit. The measurement of the currency pair movement is done through pips. Pip is actually an abbreviation for percentage in points. A pip is the smallest value change in a currency pair's exchange rate. Now, over here, as you can see, I made an example screenshot for you here for Euro USD. Now, these numbers over here are actually the price, as I told you before, for a pair, right? Now, 1 pip, right, will actually start from this number over here from your tree. The last digit, which is the green digit over here, is actually your decimal. We never count that out, right? So we never include that. Now, as you can see, 3 will be our 1 pip, and then 60 will be 10 pips, 700 will be your 100 pip, and then your 1000 will be your 1000 pip, right? Now, with that being said, don't worry, 1000 pips, which actually takes a lot of time to actually make money. Now, please note, this is not actually important as you think. We'll discuss this more when we actually talk about how to actually track your profits using percentages and terms like risk to reward ratio. Now, there's different ways to trade. When trading Forex, we never buy a physical asset. We always buy in contracts instead. This gives us the flexibility to actually trade long and short. By long, we mean you're buying a trade to profit from the upward movement, and by short, it means you're selling the trade to profit from the downward movement. Now, let's get you started with opening up your first account. Now, in order to place trades, you need a few things, which is actually your brokerage account, your trading platform, and a chart software. Without this, you can analyze or place trades. Simple as that. Some brokers are good, some brokers are bad. Make sure you pick the right one. But here are my recommendations: Vantage Markets and IC Markets. But in my community, we use Vantage Markets. So please do me a quick favor, pause the video, simply scroll down. Want to scroll down, I'd really appreciate it if you actually click the like button and let me know how you feel about the video. Now, once you scroll down, you'll head over into the description. You'll see this link right over here. Once you see this link, click on it. You'll head over into Vantage Markets Broker. Now you'll be actually ready and set to actually create your account. Great. Now that you actually know how to actually set up your account, now you also need a trading platform. The main trading platforms you need to start trading Forex is MetaTrader 4 and MetaTrader 5. In the trading space, we abbreviate these to MT4 and MT5. And another option you can choose from is CTrader. I personally like MT4 the best, but I suggest you try them all and see which one you're more comfortable with. Now, with that being said, you also need a chart software. The main trading platforms mentioned earlier already have chart softwares inbuilt. I mean your Meta 4 and your Meta 5, right? And your CTrader, they already have a software of charts already inbuilt. But in TradingView, this is optimized for this. It offers more tools to help you better understand, analyze, and review your trades. And you need that. You need that. Now, with also going into demo and live accounts, when it comes to setting up your broker, let's say for example you actually signed up like I told you to, you will have the option to choose between demo or live account. For now, please choose demo. I strongly recommend this. Don't make the same mistakes we all do as beginners. Choose demo for now. You will lose, that's a guarantee. It is best you lose in a fake demo environment than real money while you're actually learning more how to trade and leveling up your skills. Now that you have your account and broker set up, the next thing you need to actually jump into becoming a profitable trader in the markets is actually building an edge. So let's jump into building your market edge. Now, what is a market edge? In its simplest form, trading is basically calculated gambling. We win trades, we lose trades.
I'm here to tell you right now, we don't care.
Let me tell you.
We don't care.
So, like a professional gambler, we need an edge. Our edge will allow us to make money long term. Now, the first edge we as traders use is fundamental analysis. So, fundamental analysis in Forex involves evaluating a country's economic, social, and political forces to determine its currency is over or undervalued. Now, this is actually news, so we use that to actually determine the trend direction, but don't be fooled, most people don't use this. Most people lose money who use this, especially if they use it incorrectly, and most of them actually do. Right? Now, it focuses on indicators like interest rates, inflation, GDP, and geopolitical events. By measuring economic health, traders predict future demand for a currency, buying strong currencies and selling weak currencies. The second edge, which us and most people who are actually profitable use this edge and actually combine it with the previous edge, fundamental analysis, and want to do that actually become a sentimental trader and gives you a bigger edge overall. Now, technical analysis in Forex is the practice of studying historical price movements, chart patterns, and market statistics to forecast future currency pair movements. Now, I feel like I'm reading, but go with me. This is a core piece of your trading strategy, not everything. Now, the importance of charts is over exaggerated and the other things are ignored. Don't be like those traders, they also lose.
It's the biggest piece of dog shit.
My advice basically is to avoid retail trading education, right? I'm not saying don't watch YouTube videos, don't learn from people who actually been where you are and have mastered this, right? I'm just saying avoid going the general route, right? Avoid also over complex strategies. There is no holy grail, there is no 100% strategy. So when you see that, run. Whenever someone promises you 100% win rates, something that looks too good to be true is always usually not. So focus on logic-based concept. Simplicity is key. It's consistent and reliable. There are real strategies out there, right? Even in my own channel, I try my best to actually teach you the most basic and simplest strategies that are actually based on logic and not some fugazi idea. Now, the next edge, which is actually important, and without this, all of them can work, but if you don't actually master this, it all crumbles. It all means nothing. Risk management. Risk management is the process of minimizing risk and maximizing profits. Traders always lose money. Me too. This is out of our control, but there's a trick we profitable traders use. Risk versus reward edge. Probability edge. Right? Now let's jump into those two. Now, risk versus reward in Forex is the foundation of long-term survival. You need to survive more than you need to make money. Not just profitability, it is the calculated balance between how much money am I willing to lose, risk, how much money I intend to make, reward, on any single trade, often expressed as a ratio. Now, 1 to 3, for example, 1 to 2, that means if I'm risking $1,000, then I'm willing to actually make $2,000 or triple, right, $3,000 in a particular scenario or trade, right? Now, the secret is always in plain sight. Here is an example. Let's say, for example, we lose $100 on the trade. We aim to win over 3,000, so over 300 on every trade. Now, this actually means if we lose, we're going out with $100, but if we win, we're going with 300. Now, we can be wrong 60% of the time and still be profitable and still win in the end. That means I will win 40 of the trades and lose 60 of the trades. This means I lose more than I win, but I'm still profitable in the end. That on its own is an edge, right? Now, moving forward, we have the probability edge. With this approach, traders aim to win more than they lose. The secret is also in plain sight. Now, unlike before when we were actually aiming more, right? In those situations, that means we're going to actually be losing more than we win. But in this situation, you need to win more than you lose because you have probability on your side, almost like 50-50, right? If you risk $100 on every trade and also aim to win $100 on every trade, then you also need to aim to actually win more than 50% of the trades. Meaning that if you take 100 trades, risk $100, you need to at least win 51 times and lose 49 times just to remain profitable, right? So you need something more than 50% winning ratio. Now, that's actually possible. Most traders do that. I don't do that, but traders actually do that, and most traders I know also who do that are actually profitable. So there's more than one way to get to 10. Risk management, whichever edge you choose, right? You need risk control. We use stop losses and position size to control our risk. Now, a position size, right, which is actually going to be called a lot size, the size of the contract you purchase. Now, this determines how much you're actually willing to risk on a trade. Now, you also have your stop loss, which is an order that closes trade if it goes wrong. It is crucial you correctly use a stop loss and a position size on every trade, just to maintain, right, the control of your risk. If you don't, you will lose too much, no control, like I said, and that makes it impossible to maintain an edge. And like I said, to begin your journey as a profitable trader, you need to build an edge. Now, with that being said, thank you so much, guys, for watching, and I wish you nothing but the best to becoming a profitable and consistent trader. Make sure you actually take this journey very slow. It's a very steady journey, but it actually has a destination of profitability, and I know you can make it because I myself have made it. Even though it took me longer, I know these steps will actually help you get there faster, but that's not the goal. The goal is to actually get there. Right now, just make sure you actually watch this video over here. Yes, right here. See this? Watch this video over here. Now this video will actually show you how I actually manage my trades, right? How I actually take my profits and how I actually manage my losses. I strongly recommend you watch this video over here. And until next time, traders, continue to trust me for you. Trust the process. Let's go.